Hello everybody. I thought I'd talk a little bit about the stock market today. You know, the stock market has been outperforming our economy, and so it's important to realize that the stock market isn't the economy, right? So if it's a local restaurant, bars, hair salons, those types of small businesses, guess what? They're not part of the stock market. The stock market is built on big business, and right now tech is driving it like crazy. In fact, this is pretty amazing to me because we talk about, well, what about the cruise ships? What about the airlines? They're all suffering so badly, hotels and all those. Yes, but do you realize that American Airlines, it would take 280 American Airlines to match the value of one Apple. So when we talk about, the overall economy and the airline industry, for example, doing so poorly and suffering so much, its impact is really not as great as you might think, or certainly not as great as it was at one point in time. So, we do have an interesting situation with these big companies and with people working from home. So they have, they're realizing gains from having people at home and that are boosting their profits and reducing their expenses. So whether it's, they just haven't rehired everyone yet, they're hiring at a more careful, deliberate pace, or whether it's just that they've reduced their expenses and they're improving their profit margins. So when you look at the stock market and how well it's doing, and you think, how can that be? Because all my friends' businesses are going under. Well, they're a very different animal. So, we did have, I'm just kind of combining two articles here. So there's the Leutold Group's Jim Paulson. Depression-like collapse sets the stage for a wartime boom. To cut everything. So these companies, when we first had this and they cut the economy, all the companies shut down and they cut everything. So, and they had to do that to survive, right? We all know that. But where are they now? Well, they've whittled down the costs so low and increased efficiencies that their profitability is higher than ever. There's tremendous earnings growth potential down the road, not just now, but as they move forward because they've put these systems in place. And then Moody's Analytics, they're predicting gross domestic product growth on average will surge 20% this quarter, 9.6 in the fourth quarter, and 7.7 in 2001. This would be one of the strongest growth periods we've ever experienced. And of course, followed the biggest collapse we've ever experienced. So, but this will impact the entire stock market. It's not just going to be the tech sector that does well. There are a lot of sectors that are doing well right now that have pivoted, to use a cliche term these days, and are making things, making their businesses more profitable in creative and new ways. So, I haven't talked about this, but I do know. I saw some people talking about the stock market certainly hitting 30,000, 40,000. Some even think 50,000. Can you imagine the Dow hitting 50,000? That would be incredible. Of course, we do have our risk. We're assuming all these positive things are assuming that the virus will be under control, whether it's a vaccine or just a reduction in the number of cases, and our economy won't shut down again. But it looks like right now, if that doesn't happen and things continue, there's about $5 trillion sitting on the edge waiting to find out if it's going to be a good time to put their money back in the market. It's going to be a big boost. So if you're thinking about stocks, I wouldn't sell my stocks just yet. Thank you.